Hi guys, welcome to the Savvy Money Show. Me, your host Sean. Today we're discussing 5G penny stocks, and we're starting with Nokia. They're bringing out a new phone that apparently has better camera than Samsung and Apple's new phone. They've cracked at their camera and lens problem. Now, that being said, there's rumours about the reason it's gone down is there's rumours about chip issues. They had these in 2018, so I'm hoping these rumours are actually the ones from 2018 that have resurfaced and now aren't actually having chip issues. But that being said, we can play off it, because every reaction is an overreaction and we can trade the overreaction. So when it's down, you can buy for when it goes up again. We are there, now we're there. So anyway, there was also rumours about Verizon relying less on Nokia as well, and we can look into that. But if they bring out a new phone, remember Nokia were the first ones to have a mobile phone. Motorola and Nokia were the ones to bring out mobile phones. So they, if you look at the financials, have a great balance sheet. Now, operating income is good. The balance sheet, which I spoke about, they have just over 39 billion. Liabilities are 23.7 billion, and their cash to hand now, they have over 6 billion. Should be, 6.2 billion. So if they want to, they can go and pick up another company. Now we look at holding, only 5% by institutions. For a company this size, that is good. Now, what I am interested in is their data solutions. And I think this is why Zach gives it a buy rating. The data center solutions, which allows them to do the splitting, will enable key 5G, network slicing, key 5G capabilities, distributed cloud and industrial Internet of Things. Now, I do think this will be a good one to play. I've done a full depth analysis of Nokia in the past, so I won't go into too much detail. The next one I'll go into is a similar price to Nokia, but it's rumoured that Apple selected them to build their antenna instead of Qualcomm. We know they've dropped Qualcomm, and if they announce it, that will be amazing. At the moment, if we look at it, they're 557 billion in assets, and 344 billion in liabilities. That is amazing. Now, so even if they don't, they're in a good position. 77.5 billion in cash flow. Now, this for a penny stock, this is before the Apple deal, recognised for excellence by Texas Instruments. classed as a strong buy. No, and I can see why. Casa Systems. Now, Casa Systems is showing a bit of a wedge pattern. It should break out or go sideways, but there's a small chance that it can go down. 71% owned by institutions, but this is one that will be well placed for 5G network. Yeah, the income hasn't been good lately, but there are a lot of companies like that in this sector, and you'll see 444 million assets and liabilities 405 million. So debt to assets needs to be sorted out, but and 137 million in free cash flow, so it's not too shoddy. Anyway, now we've done that, we'll go on to the non-penny stock. If you enjoy any of today's entertainment, don't forget to smash that lovely like button. It helps with the YouTube algorithm and getting the video out to more people. If you haven't subscribed already, don't forget to hit that sexy subscribe button, almost as sexy as me, and become part of the Savvy Money Show family. Well, we give each other tips and updates, and you can ask me to look into any share you want. I don't charge for a Discord or Patreon. There's a great community to be a part of. If you want to be a hero, hit that bell notification. You'll be notified when a new video gets uploaded, but I know that can be annoying, especially when it's me the other end. If you're looking for a free trading platform which will trade your stocks and shares, don't forget to check out the links in the description below. You'll get a free share for signing up, worth up to £200 for signing up and depositing a small amount. Free trade only requires £1 deposit to qualify, £2 to trade, and the others require £100 or dollars depending on which app you decide on. Stake has more US shares than any other app outside of America. So that's all my old blarney for today. I'll see you later. Ecom I spoke about in a previous video, so I won't go into too much detail with Ecom. I just advise you to watch the video. It looks like a good company. Someone asked about QH, which IPO'd on Friday. No, just because it IPO'd doesn't mean it's a good company. It doesn't mean it's a bad company either. There's not too much information. It went up to $22 a share. It's come down to $13. But if you look at the financials, companies don't IPO because they don't need money. They IPO because they need money. It's losing money, and the balance sheet is the liabilities are more than double what the assets are. It's not a lot of information in there, and it doesn't even show any insider. Now, there's been some rumours about Big Rock Partners acquisition. They'll be going into retirement, like it's a shell company basically, and be merging with a retirement company. But what they're not telling, these people aren't telling you, is that basically Polar Asset Management Partners sold all of its acquisition core back in April, and a 3-month extension form was filed with the SEC where it was going to be delisted, and basically that will That was in May, and then they filed another one. Sorry, in May they filed another one, but that was the last one. So basically they're on their last legs. They find something or they're out, and that's why the rumours are coming round. So I hope that's answered your question. Me hologram cloud, basically Jack Ma from China did his whole presentation using hologram technology, and they reckon because of 5G, this will really burst out. It'll be the new technology to burst out and benefit from 5G, and people are piling in. I don't think it's a bad company to go into. You know, look at the balance, the income, and if you look at the liabilities, 140 million compared to 563 million. I mean, their current assets can pay off their total liabilities and still have some left over. So I think it's a good company to go into. Bed Bath & Beyond has had a lot of downside. People are coming out of it because they've got to close 200 stores over the next 2 years. But I think if you're looking long term, 17% dividend, I don't think you can count on that. I just think, look at it, it's one of the few stocks that's near its low from March. I would consider it if it gets down a bit more. If it gets down to about 680, 690, I'll consider picking some up. But it needs to drop a bit more, and then it needs to level out, go sideways. VXRT, I know these last couple aren't 5G, but I'm just trying to update you with as much as possible. Now VXRT is a company which has coronavirus drug in the pipeline, and I think this will do well. It's already doing well for me. Oh, where's that come from? Now, someone asked me about Tesla. I think Tesla will have a pullback, but I think before it has a pullback, it will have room to run. If you can't afford Tesla, there's always eCar, ETF. But for those of you who don't know, Vanguard is looking to pick up 13 billion shares in a Tesla. Now, and I think you will get a lot of other ETFs try to beat Tesla getting into the S&P by picking them up beforehand, thinking the price is going to rise before then, not realising the reason the price has risen so far is because you have all the people with naked puts, you know, who have shorted the stock and not covered the shorts. They've only gone in while their shorts are in play. When the shorts are out of play, they will dump the stock. Anyway, hope you've enjoyed it, and leave a comment in the box below, and I'll see you in the next video.